Great. Well, I'll kick it off here this afternoon. Thanks, everyone, for joining us. I'm Lon Shaver. I'm president of Silvercorp Metals. And in this 10 minutes, I'll try to give you a quick overview about Silvercorp. Right off the bat, when you look at this slide, I realize we've got to do some updating because we're not just a profitable silver producer positioned to grow. I think by the end of this presentation, you'll see we're in the midst of a growth program on several fronts. Next slide is cautionary statements. As usual, I'll be making forward-looking statements. And so this is the usual cautionary language for that. And I'll kick it off with really an overview of Silvercorp. And you see the title, Profitable Silver Mines Supporting Growth. So these are themes that you'll hear a couple times during this presentation. But we have a solid track record from our operations. We've produced 100 million ounces of silver and over 1 billion pounds of lead and zinc from mines that have been operating since 2006. We've done that with most recently an A rating from MSCI in terms of our sustainability. So that's been a long-term focus for us. Our mines have created profits of over 500 million, which has allowed us as a company to return over 200 million to investors through dividends and buybacks. And I'll highlight that all the numbers in our presentation are US dollars. As of September, we had 210 million in cash, and that was really delivered from operations. And subsequent to that, in November, we closed 150 million offering of a convertible debenture, which is really funding to allow us to grow into new avenues. We also have an investment portfolio. We have investments in other mining companies. That was worth 73 million. The largest of this is New Pacific Metals, who presented earlier. And I will add, we do have a position in a company presenting a little bit later this afternoon, OMI. Now, talking about our mines that have delivered cash, we've got 2 operating mines that are in China, and we've got a mine that's under construction in Ecuador. And over the last 12 months, we've had just approximately $100 million of operating cash flow from our operations. And we're looking at seeing our production rate grow from 8 million ounces of silver equivalent. And when we talk about silver equivalent, in this case, it's just silver and gold, plus the 100 million pounds of lead and zinc, growing to 10 million ounces of silver equivalent by 2027. So our fiscal year is just about ending here in March. Over the last 12 months, silver has been the majority of our revenues at 61%. And it cost us on an all-in sustaining basis $11.55 to produce an ounce of silver. Now, we've embarked on a growth strategy to unlock value for shareholders, and this has really 3 key elements. One is funded organic growth, and so we've been working on a program to expand our Ying mine in China, and I'll touch on that in a moment. We have a satellite opportunity near Ying called Quanping that we're looking to bring into production. And now that we've acquired these projects in Ecuador, El Domo is our next project up that we see turning into a producing asset. We also picked up the Condor project in Ecuador, which we can see being a high-grade underground gold mine. The second element of the strategy is acquisitions. We're looking for high-margin projects that we can bring into production on predictable timeframes and capital costs. And we completed the Adventus mining acquisition in July of 2024, and that's what took us to Ecuador. There's a few other transactions listed here that didn't go ahead, but in most cases where we didn't get into a bidding war, we actually walked away making a gain through the process. The last element of the growth strategy is incubating what we think are very promising earlier stage opportunities. And I mentioned New Pacific Metals, where we have a 27.4% stake, which itself has 2 great undeveloped silver projects in Bolivia. And we have other investments, and as I noted, one of those is OMI. So talking about Ying in China, this has really been the engine of growth for the company. It's 7 mines feeding ore into 2 mills, which are now operating post the expansion at 4,000 tons per day. Been in operation since 2006, and we sell our silver, lead, and zinc concentrates to smelters within the region on very favorable terms. We've done a lot of drilling and exploration over the years, drilled over 2.4 million meters of core. This current year, we're going to do 250,000 meters of drilling at Ying. That kind of information is what's allowed us to feed into making investments for the future of the asset. And we're in the midst of a program to transition to more mechanized mining. That will involve more of a shrinkage mining method. So to do this, we're expanding some of the ramps and adding in larger equipment. And we've just completed 2 major projects which we had on the plans for this year. One was the expansion of the mill, where we added 1,500 tons per day of milling capacity, and the second was completing a 3rd tailing storage facility. Both of those projects got completed on time and actually under budget. Moving to Ecuador and the El Domo project, which is the reason we made the acquisition of Adventus. We see El Domo being Ecuador's next mine to come into production. It's fully permitted. The 2021 feasibility highlights are shown there on the right. And we think that, in fact, the $248 million capital number, we might be able to do better than that. And the work we've been doing since the acquisition has really done nothing but confirm our belief as we move ahead with more detailed planning. And we recently announced that we signed one of 3 contracts with a big construction group in the country to take care of certain elements of getting this capital program done. And so with that and the additional work we're planning in this first quarter, we see ourselves moving into real earth moving by the end of this quarter, beginning of next quarter, to hit that production target of the second half of 2026. Now, the Condor Gold Project is also in Ecuador. It's in a different part. It's in the south of the country, south of the Mirador copper gold mine, and also south of Lundin's Fruta del Norte. Here, we're benefiting from over $80 million that was spent by prior operators in terms of drilling. And they had, in fact, completed a couple of resource estimates. You can see 2.3 million ounces of gold in the indicated category and 4.3 million ounces in the inferred. And there's even been a PEA done on this project. But when we look at the PEA, we think it's the wrong approach for this kind of asset. It's big capital, big timelines, big open pit, probably big permitting challenges. Our work in terms of looking at the geology, we see a number of high-grade underground potential zones that we think could be developed as a shorter timeline, lower capex, less permitting headache, high-grade underground gold mine. So we're working on that. We've put out some news late last year. We'll have more news this year on our next steps. I like the slide because it does give a bit of a recap. It's a bit of looking back and looking forward. On the left-hand side, it's focused on China. You can see 100 million ounces of silver equivalent. Again, just silver and gold has been produced. In our proven and probable reserve category, we have 108 million ounces. So it took us 18 years to produce that 100 million, and it's going to take about 12 years to produce the 108 based on our current mine plans. On top of that, though, we have a very healthy inventory in terms of ounces in the M&I category of resources as well as inferred. Moving over to the right-hand side, you can see what adding Ecuador does. Not only does it bring geographic diversification, it adds meaningfully to our proven and probable reserves, resources, and also inferred resources by the addition of the Condor and the El Domo projects. Despite that, we still trade at the lower end of the multiples, valuation multiples compared to our peer group. Both on EV to EBITDA, price to earnings, and price to cash flow. Now, the easy answer here, the simple cop-out is to say, well, it's assets in China that would come at a discount. I would argue, though, our track record is one that shows we've been very successful operating in this environment and delivering profits to shareholders. But the other thing is that assets that, or companies that are single mine or single jurisdiction tend to trade at those lower multiples. And so if you look at some of the other companies that are on this table, some of which have been subject to takeovers, we think the answer is to grow and become a bigger and more diversified company. And so that's the reason for our strategy that we've started on. So some important catalysts to consider is this year, obviously, as we move ahead with El Domo construction, we'll have more news, more information on the contracts, the timelines, and hopefully give a bit more concrete information in terms of the costs, which we're not in a position to provide just yet. Advanced Condor with more concrete plans and information on how we can see that transitioning to an underground gold project. We look to continue to optimize and deliver on the promise of the Ying mine, which has been a great producer, and we see will do so for many years to come. And that will come out in the production guidance, which we'll be providing here shortly for next fiscal year. But as I recap, it's 8 million ounces of silver equivalent for the year coming up in March. And lastly, New Pacific, where we have that investment, 2 great projects that are in the permitting phases. So any news in terms of advancement on that will be certainly a positive for the markets. And with that, I'm out of time. I'll thank you for your attention.